Welcome back. Today, we're taking a deep dive into an explainer on one of Japan's absolute most recognized industrial names, Hitachi, Ltd. That's ticker 6501 on the Tokyo Stock Exchange. Now, if you think you know Hitachi purely as this traditional legacy hardware conglomerate, you might want to hit refresh on that perspective. Because beneath that hardware exterior is a massive, radical digital transformation. Hitachi is quietly morphing into an AI powerhouse, and we're going to use the data to see exactly how they're pulling it off.
Okay, here's our roadmap for this explainer. First, the industrial titan shift. Second, breaking down the numbers. Third, the Anthropic AI partnership. Fourth, analyst consensus and targets. And finally, key investment risks.
All right, let's jump straight into Section 1, the Industrial Titans Shift.
Usually when we look at legacy industrial giants, we see these sort of slow-moving, hardware-heavy operations that really struggle to adapt to the modern era. But Hitachi? They're aggressively moving beyond that traditional hardware model. They're pivoting hard into high-value digital systems. And the cool thing is, they aren't abandoning their industrial roots. They're digitizing them. They're basically taking heavy machinery and global infrastructure and turning them into incredibly smart, connected networks. Moving on to Section 2, breaking down the numbers.
Now grab your coffee for this one because look at this staggering number, 2.71 trillion yen. That is Hitachi's reported sales for Q1 of fiscal year 2026, which wrapped up on June 30th. To put that into perspective, that represents top-line momentum that is up nearly 20% year over year. For a company of this size and age to literally generate a 20% jump in quarterly sales, that is immediate shock and awe for anyone tracking Japanese equities right now.
And they aren't just sitting on that cash either. They're putting that capital to work with a massive 500 billion yen share repurchase program. We're talking up to 160 million shares here, which is about 3.56% of their total shares outstanding, and this runs all the way through March 2027. So why does this matter? Well, a buyback of this magnitude shows ultimate management confidence, for sure. They are making a crystal clear commitment to returning capital to their shareholders while they navigate this huge digital pivot.
So the really crucial point here is how this buyback impacts the underlying math. Let's look at the baseline. Back in FY 2025, they delivered 10.59 trillion yen in sales and 802 billion yen in net income. Very, very strong. But as we move into Q1 of FY 2026, even though net income edged down just slightly to 189 billion yen, their basic earnings per share actually rose from 42.01 to 42.24 yen. This brilliantly illustrates that buyback program in action. By taking shares off the market, they're essentially engineering higher per-share value for existing investors, even when quarterly profit sees a minor dip.
Which brings us to Section 3, the Anthropic AI partnership.
Okay, to really grasp Hitachi's pivot, you have to understand this vital concept, physical AI. And no, we are not talking about chatbots writing your emails here. Physical AI is artificial intelligence that directly interacts with and controls real-world infrastructure. Think energy grids, mass transit systems, advanced manufacturing, the stuff that keeps the world running. Hitachi is bringing this to life through Lumada 3.0. That's their digital solutions business model that merges IT, operational technology, and connected products with artificial intelligence.
This physical AI strategy really culminates in their massive announcement from May 2026. Hitachi forged a total game-changer of a strategic partnership with Anthropic, the AI safety company behind the Claude model. Just look at the sheer scale of this rollout. Step 1, they're deploying Claude AI across all business processes to roughly 290,000 employees worldwide. Step 2, they're jointly developing programs to train a staggering 100,000 AI professionals. And Step 3, they're establishing a frontier AI deployment center across North America, Europe, and Asia. This basically puts Anthropic's AI experts directly into the exact same room as Hitachi's cybersecurity and operational specialists. And I've got to say, I absolutely love this next concept, Customer Zero. It's brilliant. See, Hitachi isn't just building these advanced AI systems and blindly selling them to clients, hoping for the best. They are using their own massive global workforce of nearly 300,000 people as Customer Zero. They test, they refine, and they prove out these AI productivity solutions internally first. It completely de-risks the product for future buyers because Hitachi can turn around and say, hey, we already know this works because it literally revolutionized our own operations.
And guess what? The market is voting with its wallet. Lumada's Q1 revenue hit 1.14 trillion yen. That is a 31% jump year over year. This single metric proves that their pivot toward high-value digital solutions is already paying off financially. This strategy isn't just some theoretical whiteboard exercise. It is driving serious, tangible top-line growth.
Let's shift gears to Section 4, Analyst Consensus and Targets.
When we look at analyst sentiment, the institutional story is actually pretty wild. Out of 14 tracked analysts, the consensus is overwhelmingly bullish. We're seeing 14 buy or hold ratings, and specifically 0 sell ratings. I mean, it is incredibly rare to see a complete absence of sell ratings for a legacy conglomerate. That tells you the institutional community is fundamentally buying into this whole AI transformation narrative, lock, stock, and barrel.
But when we actually look at these specific price targets, we see a pretty wide spread here. The low estimate sits at 4,600 yen, while the high reaches all the way to 7,100 yen. The average 12-month price target is right at 6,129 yen. Based on the data, that average represents about a 12% upside from recent trading levels. The wideness of the spread is really important to note, though. It definitely reflects differing institutional views on just how fast Hitachi can actually execute this massive digital shift.
Breaking down a few of the notable calls, we can really see the range of this institutional optimism. UBS is up at the top end, maintaining a buy rating with a 7,100 yen target. That implies nearly a 35% upside. Goldman Sachs is also at a buy with a 6,600 yen target. JP Morgan maintains a buy as well, though they're playing it a bit more cautiously at 6,000 yen. So the direction? Universally positive, but the magnitude of the expected growth definitely varies by firm.
Finally, we have Section 5, Key Investment Risks.
All right, let's juxtapose both sides of the coin here. The bull case is anchored by what some analysts call a flawless balance sheet. We're talking a debt-to-equity ratio of just 0.16. Plus, a PEG ratio of 0.79 suggests the stock might actually be undervalued relative to its earnings growth. Add in the Anthropic AI intersection and a projected 6.8% compound annual growth rate, and it looks incredibly strong. But on the flip side, we have real execution risks. The market had a noticeably tepid response to the new CEO nomination, which suggests investors want to see a very clear medium-term profit plan. Plus, building AI infrastructure isn't cheap. Rising project costs and intense IT competition could really start to pressure their margins.
Drilling down a bit more into those friction points, to hit that bull case, Hitachi needs to reach 12.9 trillion yen in revenue and 1.2 trillion in earnings by 2029. That is aggressive, and it's far from guaranteed. Conservative investors are also pointing out that management's operating margin targets for digital systems and green energy have been viewed as a bit too cautious, potentially setting them up to miss those broader consensus forecasts. If the new leadership can't seamlessly execute the AI integration while wrangling those rising IT costs, well, that 12% average upside might be pretty tough to realize. Which brings us to our final thought today. As Japan's industrial sector undergoes this massive digitization, is Hitachi's physical AI evolution the ultimate blueprint for the future of infrastructure? Or is this just a really high-stakes corporate experiment? I mean, financials are incredibly strong, the buyback is super aggressive, and that Anthropic partnership puts them right on the cutting edge. But the risks of leadership transitions and sheer execution still loom large. It's a fascinating dynamic, and one that is entirely redefining what it means to be an industrial titan today. Thanks for joining me for this explainer, and as always, keep learning.